Brad Williams, Frugal Finance Mortgages. Let's talk a little about mortgage cost and surprised changes in your loan documentation. Here's the question. Can my final mortgage costs increase from what was on my loan estimates? I owned a mortgage company for a long time, pre-2008-2009 meltdown. And the crap I saw, what the borrower was stated in terms of a rate lock or the interest rate versus what they had on their loan documentation were night and day. Back then, there was no CFPB. There was no true regulatory agency. I was registered under the Department of Real Estate in California. Up until about 2 years ago, I was a real estate broker for nearly 40 years. They were the controlling agency and they just didn't have the staff to regulate the lending side of the deal. That's why CFPB came into play. And shamefully, the Trump administration just neutered the CFPB. So you, as a future homeowner or current homeowner who's looking at possibly refinancing or doing some kind of borrowing, look, the burden rests on you now because it's doubtful anyone will be regulating this. And again, with that being said, some mortgage costs can increase at closing, but others can't. It is illegal for lenders to deliberately underestimate the cost on your loan estimate. However, lenders are allowed to change some costs under certain circumstances. In the past, this didn't hold. You took it or you walk away from the loan, and most people bit the bullet. And that's the deal, because you're so committed and you're under so many constraints. If you're buying a new home, these mortgage brokers, and there were so many sleazy loan brokers, they pop up literally in 5 minutes. And then after screwing hundreds of people, they just shut down and open up under a new name. Well, now it's a little more challenging. There's multiple licensing requirements and there's somebody overseeing. It's called the National Mortgage Licensing System. Now, they're not the regulatory side. They're the licensing side, but at least there's some control. But it's hard to say now in terms of the regulatory side, who's going to be babysitting the mortgage lenders. Interest rates, if your interest rate is not locked, it can change at any time. Even if your interest rate is locked, your interest rate can change if there are changes to your application information or if you do not close within the rate lock time frame. That's the biggest concern here, is when you do a 10-day lock, there's usually a 10-day lock, a 30-day lock, 45-day, 60-day lock. The longer the term, the more exposed that lender is, so they're going to charge you a bit of a premium for the longer lock. That's why people would try to limit that added cost, and they do a 10-day lock. And all it takes is one contingency to screw that up. Then you lose whatever that lock is, and you're subject to whatever that interest rate is at the time. Now, a lot of people would play the other game, and it's not uncommon. You do a rate lock, you do a 10-day deal, and interest rates drop. Well, you intentionally forfeit that rate. Well, here's the deal. It didn't take long for the lender to say, look, you get the current rates even if interest rates go lower. But if interest rates go up, it's a one-sided deal. If interest rates go up, you lose that lock and you're going to be subject to the higher rate. Or you get one free relock. It depends on the lender. And some will even add a cost if you have to do repeated rate locks. Check at the top of page 1 of your loan estimate to see whether your rate is locked and until when. Learn more about how rate locks work. I'll have a video on that. Closing costs, there are 3 categories of closing costs. Some closing costs, the lender can increase by any amount. Some, the lenders can increase by up to 10%. And some, the lenders can't increase at all. However, under certain circumstances, these rules do not apply. For example, your lender is allowed to change your closing costs without restrictions if you decide to get a different kind of loan or change the amount of your down payment. The appraisal on the home you want to buy came in higher or lower than expected. You took out a new loan or missed a payment, and that has changed your credit. Your lender could not document your overtime, bonus, or other income. These type of situations are called a change in circumstances. Costs that increase by any amount, these costs are not controlled by the lender and can increase by any amount at any time. Prepaid interest, property insurance premiums, or the initial escrow account deposits. Fees for services required by the lender that you have shopped separately for. If you choose a service provider that is not on the lender's written list of providers. Fees for third-party services that the lender does not require. Costs that cannot increase at all. There is a change in circumstances. These costs can change by any amount, but otherwise they cannot change at all. Fees paid to the lender, mortgage broker, or an affiliate of either the lender or mortgage broker for a required service. Fees for a required service that the lender did not allow you to shop separately for when the provider is not affiliated with the lender or mortgage broker. An appraisal, for example. Transfer taxes. Costs that can increase by up to 10%. If there is a change in circumstances, these costs can change by any amount. If there's no change in circumstances, then the total of these costs cannot increase by more than 10%. Recording fees. Fees for a required service when you've chosen a third-party service provider on their lender's written list of providers. If the provider is an affiliate of the lender, the cost cannot change at all. What happens when the costs change? If your application has a change in circumstances, you will likely receive a revised loan estimate. The costs have increased more than the allowed limit, and your application has not had a change of circumstances, you're entitled to a refund of the amount above the allowable limits. Comment. Let me know if you run into a situation where you think there's been a violation, that the costs were exorbitant, that you had no recourse because you were buying a home and you were under the contractual obligation to satisfy the closing, but it ended up costing you an extra couple thousand. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.